Hi, I'm Patu from FreeFinCal, and in this video, I want to talk about what to expect from a financial advisor. By financial advisor, I'm referring to a fee-only financial advisor registered with SEBI as an investment advisor. What to expect from such an advisor, and what kind of questions that you should ask them before engaging. The reason I'm making this video is because there are a lot of incorrect opinions and misconceptions about financial advisors, especially from those who have very little understanding of what they do about the service. And I think it's better to clear the misconceptions. I am not a financial advisor, and therefore I have no conflict of interest in saying this. Before we begin, I have today published the December 2019 mutual fund screener. We have a lot of interesting posts coming up. This is the year end, so my financial audit is due. I will do it after the Chennai meet, which is on the 22nd. The financial audit is due plumb line for 2020. I will post it in December if possible. Then I was asked to create a low volatility momentum stock index based on the screener that I published, so I want to put that out as well. There are a lot of things, other things I have in mind. Let's see. I also have a debt mutual fund screener in mind, but let's see how to implement this. There's a lot to do and not enough time to do it in. So let's get to this. So the what does a financial planner do? I mean, when I say financial planner, again, I'm only referring to fee-only financial planners registered with SEBI as an investment advisor, and I'm particularly only referring to those who charge a flat fee. They're not a fee linked to your assets under management, a flat fee. You should not go to anybody else as far as I'm concerned. So, Swapnil Khande had already written a very nice post about what are the questions you should ask. Of course, you may say there's a conflict of interest, but the questions are really tough, and you notice that I mean, most financial planners themselves will find it hard to answer that. So you can have a look at that article. I will link it below. Uh, I have also made videos before on who are fee-only financial advisors, what they do, and so on. So I will not get into that. You can check out those videos. I'll try to link them here or below. What I want to tell you is that many people think that financial advisors are expected to produce better returns, are expected to produce, are expected to beat the market, are expected to guarantee returns, and so on. And many people say so now with a very disdainful tone, saying, "Oh, they can't. When they can't guarantee returns, why should I pay them money?" Nobody can guarantee returns when somebody is working with market linked instruments, whether it is stocks, bonds, whatever it is. So there's no need for anybody to guarantee returns, and that's the whole point. They don't because they don't need to. A financial planner is somebody who is going to help us understand where we are today in terms of finances, and they are going to tell us where we need to go tomorrow in future, I mean, and how to go. How to go is something that you will understand only when you renew the the engagement annually. But that's the whole idea. So they are going to give us a compass, saying you're here, you need to go there, and they're going to try and take us there. Of course, all anybody can do is try. But the point is, what you need to ask them is this: what steps will you do to help me? So today I have a net worth of, let's say, 10,000 rupees, and tomorrow I need to have a retirement corpus of my favorite number, 7 crores. How are you going to help me achieve this 7 crores? In the sense that what will you do to find out whether I'm on track? And if I'm not on track, what will you do? That's the question which a financial advisor, in my opinion, should convincingly answer. So, for example, if I am going to go to a financial advisor, this is the question I will ask: what will you do to help me get close to my goals? They don't need to guarantee achieving goals, they don't need to guarantee a corpus, but it's enough if they tell us what are the steps they will do to try so that we will achieve our goal, we will achieve a corpus as close as possible to the intended corpus. If they can answer this question convincingly, that is enough for me. I'm not looking for magic, I'm not looking for guarantees. I want a financial planner with integrity, meaning that they're so from here to there, they're going to take a path. If that path is for some reason not working out, then they should be able to tell the client, look, I did this, this is not working out, we need to change, let's change this course. And they need to convince us that it's time for a change and the change should be this way. That is what I want. I don't want more than competence. Competence is something is not easy for us to judge in personal finance. It's not like a doctor where you go with a cough and the cough will vanish in 3 weeks because of the medicine. That kind of thing. That's not possible in personal finances, especially with long-term financial goal planning. So I don't want exhibition of competence because you can't find enough examples of such competence. I want integrity. I want the person to first of all give me convincing technical answers, and second of all, they should have the maturity to not sound like they're wizards. That I will make you get this much money for sure and so on. So that's something that you can feel when you talk to them, and I think that's what you should expect from a financial planner. The method and their approach to the whole idea of financial planning and how they intend to help us help us get close to our goal. That much is enough. And this is not like this very very wrong to compare financial planners to doctors. It's quite immature because they're completely different rules. Because it is very easy for us to DIY money management. It's hardly rocket science. With some interest, we can understand what's going on, and we can expect the financial advisors to do that or to do better than that. Whereas in medicine, you can go with a cough, and it could be anything as simple as a common cold, or it could be as dangerous as lung cancer. So for that, you need to engage with the doctor. The doctor needs to give medication. They need to see what happens. They need testing and so on. Whereas in a financial advisory, you can't go to the future and say, I will be getting this much money, I'll be getting this much returns. It's a long drawn process where the financial planner is also walking into the unknown, but is holding the client and doing it. That is all. So both the financial planner and advisor are shooting in the dark, but they have each other for support, and that's the way it works. And there's no other way. I don't see any other way. That's the only way around. It's just that, do I have a guide who is not only competent in my perception and from my engagement with them, and somebody who's got the integrity to not make it sound like rocket science, and who has the integrity to accept mistakes and realign my portfolio. If that is there, I think it's fine. Because unlike medicine, you cannot get instant results. That's the whole point. So in medicine, a doctor can give a course of medicine, drugs. If that doesn't work, they can change it, ask for more evidence, and so on. The iterations can happen a lot more quicker, whereas this is not an iterative process at all. So there's no comparison. It's an immature comparison. All you need is a person with integrity, and this is what you should expect from a financial advisor. Ask them, what will they do? What are the steps they will take to help me attain a corpus close to what I need for the future needs? I think other than that, there's not much else you can do. So, bye bye.